Hey pack leaders, this is him, my friends Arnie, protecting families, protecting pack, and today we're going to do a Bitmex trading tutorial. But I'm going to kind of add on to that tutorial about a book I just picked up. It's called the Daily Trading Coach. So let me kind of show that to you now. That's it right there. Oh, no, let me see if I can get to the front. Daily Trading Coach. Anyways, it's by, you can probably look it up, Daily Trading Coach by, what's his face? Brett Sternbarger. Okay. So basically, it's a short read, but there's like over 100 daily lessons that you kind of go through and kind of just do it each day. The recent one was kind of, kind of the preface of us coaching ourselves. And that when we're coaching ourselves, we kind of need to also care about ourselves in a sense. Sometimes we trade because we want to go out and look, talk to people and this and that, but we need to actually understand who we are, in a sense, communicate with ourselves. I don't know, this is kind of like a self-love kind of thing, not like in a sick way, but like an appreciation way, with care and gratitude, with everything that we do. So whenever we have a trade that we've done, we've learned it, but yet we go and trade, and in the heat of the battle, everything goes out the door, and we end up doing the same mistakes over and over. And we're like, why? Well, why do we keep doing this? Even though I know not to do it, not to chase that market order or that order book with the market order, but yeah, you do it anyway, and you're like, oh no, it turns, and then you screw yourself, right? Even though you learned it, you know not to do it. Why do you keep doing it to yourself? And so that's where we need to embrace that failure, but tie it to a fear, so that we know that if we do that, what's going to happen to ourselves. So it could be like, what's the worst case thing that you think about? And well, you'll be on the streets, in the cold, freezing, and not providing. So that's kind of one thing I would tie. So like, hey, don't chase it. You're gonna get this. You kind of feel the shiver a little bit before you go. Okay, no, back off on that market order. Let's look at the charts. Let's see where it is. It's not really a bull run, whatever, or a big dump. Just kind of place it where it needs to be, and then kind of, and it's been working out. Okay. Some of the things I've also learned is not taking profit, or when I'm in profit, I'm like with the kids or whatever, and I don't put my stop loss in profit. And I'm like, okay, the biggest thing is to protect the equity, which I've kind of watched on this other YouTube video, is to make sure you always protect that equity, because once that goes down, then it's hard to gain that back. So placing proper order placement is one thing, and also locking in those equities so that you can always gain if it continues to go further. If it stops you out, fine, just get back in. It's all good. No problem. It's easy to get back in. It sucks when it's hard to gain it back once you lose it. Especially when it hits you psychologically, and then it kind of spirals downward. So, all right. So the next one I want to talk about. Let me switch over here to my account. I've done the same thing here. I placed my limit order. So I'm at 5,000 contracts in, 20% ROE. It's moving a little slower, but we're just gonna take our time and watch it. And I think I have my stop at 3589. So I'm trying to hide behind this here, which I don't know how long that's gonna last, but if it's strong enough, it's been new orders been coming in to kind of push it up. Okay, so here it is. And my order was placed down here, and it was placed like last night. I went to bed, and it finally came down. It flicked me in, which is the best way to get in, because you get in with profit pretty soon. And that's kind of the best way I want to enter. I don't want to enter in the middle of the trading range, nor do I want to get into the, oh my gosh, it's pumping. You get in and then dump. So I don't want to get in part of this stuff. I want to be able to put my orders outside of where these flicks are. So previous flicks do give us a good idea of where to put those placements, and the flicks do gradually come down, And so as this comes down, you can be like, okay, maybe I'll put mine a little lower, or maybe right there. So it kind of gives you a hint of where the next flick's going to be, or at least a range of where it could be. Okay, so you could probably put the, you know that there's a line being developed here, so you probably put your, you know, your buy order right here, just above that, where you think the flick's going to be. Okay, and then there's a flicker here, so it kind of matches up on the flick line. So there's probably some kind of pretty good support here, and then on the downside is pretty low. So we just don't know when the dump's going to happen, or when the bull's going to happen. So what we're going to do is always have a stop loss right behind it, of course in the loss, so because you know I'm not monitoring it all the time, and I have to put stop losses because I'm not watching it, you know, like a hawk. So that's the reason why I do it. And if you are and you know how to kind of, you know, watch it, then great. But usually when it flicks down, you know, you kind of have a certain range where you know it's not going to go beyond that, and you have to. Okay, you already placed your order, you know, low enough already. Okay, so it looks like it's continued to go. I'm gonna still go ahead and I'm looking at the 5-minute right now, looking at the ups and downs of it, and only raising my stop loss in profit based on the charts. And I don't raise it based on the order book because the order books can trick you. Once I see a dump down, up, dump down, then, you know, right there is probably what I'll kind of, you know, raise it from there to there. Once it goes up and down again and starts to go up again, then I'll probably move it up to the next bottom level, the next low, I guess, or high low. And then once that goes down and pumps back up again, then I'll probably raise it up a little more. Okay, but at a certain point, once I'm in decent profit, I'm just gonna say, hey, you know, this is good enough. I already got positive profit. I can't lose. I can only gain. So I might let this run for a few hours, and then, you know, have confidence that I'm either gonna win a little, or I'm gonna win a lot more, depending how it goes. So I don't have to constantly watch this and like just hang up the kids. Who knows? I might check back later. This could probably be in the 3.640s or whatever. I'll be like, all right, cool. Let's just, you know, ramp up the stop loss all the way up because I want to get out. Put my limit order. If it keeps pushing up, then we'll go for it. And if it comes down, then, you know, we'll just take what I can get. And then I'll probably position myself into shorting on the top of that. So once I get to that point, because I know the trading range here is probably up to 310, 320, around that range. So once it gets to about that, around the 600-ish, I'll probably start, you know, looking to get myself out, and then compound what I've gotten and short it on the way back down. Okay, so it's pretty low volume. Sometimes most people don't want to trade low volumes because it's, you know, freaks you out and you don't place in. It sucks when you place yourself in the middle of it and you're not in the zone, is what they call it, and you're like switching back and forth and whatever, you know. So it really gets to you. So definitely learn a lot here, and also, you know, logging my lessons learned each time, and then, you know, writing out what I need to do differently so that I could be a better trader. Okay, all right, thanks. Talk to you then.